All right, we are live. Welcome everyone to the PrimeXBT webinar that we're going to be hosting today, and we're going to talk about the current situation that we have in the market. I'm sure that most of you are aware of what's happening right now. We got the Bitcoin chart here to the what is it? It's the left of me or the right of me? And as you can see, we had quite a big dip on Bitcoin, and not only on Bitcoin, we had quite a big dip on the S&P 500 in the global markets as well. So we have set up this special giveaway, or this special webinar, I should say, for you guys today, so we can cover what's happening right now and give you our analysis and the analysis that comes from the research team here at PrimeXBT. My name is Jonathan, and I'm a market analyst here at PrimeXBT. And before we start here, I want to make sure that my audio is working and the video is working. So if you could just let me know in the comments if everything is working as it should, you can hear me correctly, or if you can see me correctly as well. And I'm going to open up the chart here and explain a little bit what we are going to do today. So let me know first, everything is working, the audio is good, everything is as it should. It seems like the sound is all good on my end, so we'll get right to it. Guys, welcome. Make sure that you do hit that like and subscribe to the channel if you haven't already. And let me know, guys, where you guys are from. I'm very interested in hearing where you guys are from. I know we have a very global and diverse community here at PrimeXBT, but I'm super happy to have you all in here, and I would love to see where you guys are from. And guys, make sure that you take this opportunity now to ask all the questions that you want and need answered in terms of the markets, and we will do our best to help you out in the current situation that we have in the market. So to begin, we have the full picture, right? Let me try to break down the full fundamental macro situation that we are in right now, and then we're going to go into the charts. We're going to look at the S&P 500. We're going to look at gold. We're going to look at Bitcoin, Ethereum, Solana, and XRP to kind of try to get a feeling for where are we in this current market phase. And if there's anything specific you want me to look at, anything you want me to help you guys with, let me know in the comment section on YouTube, and I will gladly help you out. So right now, we are in what you could call a pro-growth policy environment. That basically means that the government is spending to boost the economy, the running deficit, and the central bank, the U.S. central bank, the Fed, the Federal Reserve, is or they have been somewhat supportive of that approach, or they was at least supportive for that for a while, and that relationship between the central bank and the government is basically creating this pro-growth regime that we are in right now, which aligns with the Goldilocks regime, right, where the environment is not too hot, not too cold. Now, a huge part of the current bullish sentiment in the market, and this goes for crypto as well, because we have to understand that the global markets, we are in an environment where we do have global markets, right? And Bitcoin is part of the global markets, and Bitcoin is a risk on asset. And the S&P 500, which is the S&P 500, the stock index in for American stocks, is also a risk on asset. Well, the stocks within that index is risk on asset. So when the when we are in the risk on mode, S&P 500 moves higher and Bitcoin moves higher as well. And as you see now, we're going to break this down more in more detail. What we're seeing right now is obviously the S&P 500 is dipping to the downside, which gives us a move down on Bitcoin as well. So the crypto, we're not going to call it a crash because this is not a crash, but the crypto dump, if you will, is not an isolated event. It's not happening because there's something fundamentally wrong with crypto or Bitcoin. It's happening because there's a slight risk off mode right now. And that's because, a big part of, like I said, the bullish market sentiment has been driven by the AI boom. We all know about the AI boom. We know, Nvidia. I believe Nvidia today is the most valued company in the history. This AI boom is just crazy, right? So everyone's really excited about this AI boom and AI stocks, but that also means that the market might be a little bit fragile if people start to worry about these stocks being overvalued. And that's what we see. We saw yesterday, right? We saw that, I believe it was Palantir came out with, they beat expectations, I believe, and they had pretty good growth and everything looks very good, but people still sold that stock because they were worried that the AI companies are overvalued. So if something is the value of a stock is far above its fundamental value, that's the definition of a bubble. When the price of an asset exceeds the actual fundamental value of the company or the stock, that's the definition of a bubble. And that's what we're seeing right now, a bit of a pullback because those valuation concerns in the AI space. And at the same time, the Federal Reserve in America has turned a little bit more hawkish. And for those of you who don't know, hawks, they fly high, and doves, they fly low. When you're hawkish, this is central bank language, right? So when you hear hawkish, it means that interest rates go higher. It's a very simple term. Dovish, interest rates down. Okay, so that's all you really need to understand if you're new to all of this. So they were a bit more. They are leaning a little bit more hawkish, which means they're not as eager to keep the rates low or to make financial conditions much easier, and they're kind of tapping the brakes a little bit, and that makes investors a little bit more cautious. We have seen that they're pushing back on the rate cut expectations for December. So the whole summary here, before we go into the charts and the technical, is that we're in a growth-friendly environment driven by policy, but we're now seeing a bit of a reality check because the Fed is a little bit more hawkish and people are nervous about the AI stocks being overpriced. And that sets the framework for what we're going to be doing here today. I'm going to start by looking at the S&P 500. Very, very good questions coming in here, and we will cover all questions, but I think I'm going to pull up the questions as we go along. So just bombard me with questions. Just keep them coming. I love when the community is engaged and asks me questions because the more questions you have, the better we can make this webinar. Do you think we are already in a bear market? First of all, thank you for the question and welcome to the live stream. Happy to have you here. No, I do not think we are already in a bear market, but there's something very important to understand here, okay? Bull markets and bear markets, they do not move in one straight line, okay? Now, let me draw a trend line here. This is a bull market. We all know that bull markets, they go up. This is an uptrend. Low prices, high prices, bull markets go up. But what happens in a bull market is obviously price is not perfectly going to stay on this course, on this line, okay? Markets are going to move like this, okay? So the question then is this a bull market? I mean, is this a bear market? Is this a bear market? No. This whole market is a bull market, okay? A bear market is when the middle line, when we see clear signs that the overall primary trend, and this right here is the primary trend is the most obvious and evident trend on the chart, okay? As long as the primary trend is bullish, you are technically in a bull market. But what happens if market starts turning like this? Well, now you might question the bull market theory. And now what you might have is an overall trend that points to the downside. It's very important to understand the concept of primary trends and secondary trends. And at PrimeXBT, we are very active with the helping our traders understand the market from both a fundamental and technical point of view. We are working heavily in the background on a lot of very high quality educational content that we will provide you with that will help you analyze and digest the information that the market is giving us. This right here is the primary trend. These smaller trends right here, these are the secondary trends right here. We are currently, I believe, in a secondary downtrend, for example, on Bitcoin. Great question. Love this question. And this question really makes me want to look at the Bitcoin chart because it gives you that perfect example of what I've talked about, right? So we can look at this and we can say, what is the primary trend? A good way to get an understanding of the primary trend is to look at the weekly and the daily, and for some assets, the monthly as well. But I like looking at the weekly and the daily. And, the weekly and daily, they give us the same information, just in a different way. So what we can do here is we can just very easily, I'm going to switch to the log scale as well, because the log scale, the logarithmic scale, is a much easier way to view markets long term. So if we watch this from a log scale perspective, we can arguably say that the beginning of the bull market was somewhere around this level. Let's just draw a line straight through this area and then ask yourself, is this a bear market? Obviously, you're looking at this, and from a technical point of view, you would not say that this is a bear market, right? You would say that this is obviously a bull market. Now, is this right here a bear market? No, that's the secondary trend. Is this a bear market? No, that's the secondary trend. What are we seeing right now? Are we even seeing a downtrend? The question is this even a downtrend, or is it just another range? Okay, so the question is, are we already in the bear market? Technically, no. But are we close to a bear market? Well, you have to look at it from a point of view where you're counting the swing points in the trend. We got one swing high, swing high, swing high. We got a swing low, swing low, swing low. What if we break below that one and we start trading like this? Well, then maybe we've come into this scenario where the primary trend is starting to see signs of a potential shift. But that is not what is happening right now. I see signs that there is, of course, the probability of this being an opportunity to buy the dip. Now, of course, nothing that we say here or show you is financial advice, and any opinions that I have on the market and that I'm going to share with you here on the market is from a strictly educational and informational purpose only. This is simply general information on the market and not investment advice. But it does look like there are signs of this being a dip to be potentially bought. Now, we see a dip on Bitcoin, but it has not truly changed the structure of the weekly chart. Going back to the arithmetic scale, we can see that we're just simply hitting a weekly support area right here, the same area that acted as resistance back when it broke into all-time highs back in December, January, this beginning of the year. Going back to the S&P 500, now remember, this all started with a risk-on sentiment where we had the investors questioning the AI boom that is currently driven this sentiment in the market. So we got to look at the S&P 500 right for that. If we go back to the S&P 400 and we do the same principle on this one, is this a what's the primary trend right here? Is simply look at this and then answer that question, right? What's the primary trend on the S&P 500 right here? And I would love for you to write the answer in the comments right here. You know what? I'm not going to wait. This is obviously not a bear market. This is obviously not a bear market. This is very, very strong market. On the weekly, we're basically just getting it move straight to the upside, which also tells us that it might be a little bit overextended. And with the insane amount of liquidity and money that is being pumped in to the market with this AI bubble, might be a little bit overextended. So not weird to see a pullback. Not weird at all. We've seen these pullbacks in a bull market over and over and over again. Now, if we look at the daily, we can safely say that we have right here, let me remove some of these old drawings. This was from our last webinar that we did. What we can see here from the perspective of the S&P 400, and on the daily, what happened here on the daily was yesterday we came down when we filled the weekend gap right here, and we're now hitting a support level that has acted as very good resistance in the past, and it should now act as a support if history repeats itself. And even though history doesn't always repeat itself perfectly, it does rhyme. We can add a Fibonacci. We're going to add some Fibonacci levels here, and we do that by selecting the Fibonacci tool. And I'm going to go into settings and change that one to this template that I have, which gives us the reload zone, as I like to call it. And the reload zone is the area between the 0.618 fib and the 0.786 fib. This to me looks very, very bullish. If this daily candle is going to close like this, it reminds me of a hammer. It reminds me of a hammer at support. Good bullish candle, good bullish structure. Going into the 4 hour or even the 1 hour, we can add fibs on this move. We see a bounce and we see another hit here of what looks to be a 50% level right here. So what I'm going to do right now, I'm going to go long on the S&P 400 because I do think that this is a dip that I believe is going to be bought up. Now, I believe that. Doesn't mean that you have to believe that. Doesn't mean that you have to follow this. Doesn't mean that you have to take this as financial advice at all. It only means that I've now taken the principle from the old legendary creators of technical analysis, Charles Dow and his Dow theory, where he talks about the primary and the secondary trend. A very simple concept, but that's where the saying comes: trade with the trend. Okay, and that's what I'm going to be doing here. I don't care about the 1 hour trend. I don't care about the 50-minute trend. All I care about what's the dominant trend in the market. Where is the market most likely to be in the next 2 months? And I believe the S&P 400 in the next 2 months might be trading higher. But I do have to say, though, looking at the dollar strength might be a little bit concerning, because if you look at the daily on the dollar currency index, and for those of you who do not know, the dollar currency index is a selected basket of different currencies weighted against the dollar. It's about 60% Euro USD, which means it's almost perfectly inverse correlated to Euro USD. That's right. We've added a bunch of new altcoins to our crypto futures platform. So if you haven't checked that out in a while, definitely go in and you'll be surprised by all the new altcoins that we've added. Thank you for the comment and thank you for joining the live stream. Happy to have you here. And while you're at it, hit that like and subscribe. And yeah, if you want more live streams like this one, make sure that you hit that like. So yeah, the dollar... the dollar strength is definitely a little bit concerning, especially if we break out here. If we break above that 100 area, the 101, whatever that is, the level right here, that's the exact number is 100.253. But I know that I'm definitely bullish bias to the upside here on the S&P 500. And what I'm going to do here is I'm going to go into the PrimeXBT PX Trader platform right here. And I'm going to open up a trade on the S&P 500. So let me change my screen for you guys, and I'll show you how that works. But so here we have, this is the crypto futures platform right here. And as you can see, we've added a lot of new altcoins here to the list. So definitely go in and check that one out. We're going to be placing a trade on the Bitcoin as well here. But first, we want to go to the PX Trader platform. I'm going to go in right here and I want to open a position on the S&P 500. So what I do is I go to indices right here, and right here we have, where is it? S&P 500. This is on the 1 minute. I want to, let's see. I'm going to go and just adjust a couple of indicators right here. I'm going to be Just removing the MACD like that. And then I'm going to go out to the daily. Perfect. That is a beautiful daily candle right there. We're going to be placing the fibs here in the same manner. I believe I took the fib from that low. From that very low right there, and then we're going to be placing it up here. These are the original fib settings right here. Just to see where I have that one, 0.618, and then I have the 50. Okay, so that's perfect. Going down to the daily, this looks good. Let's start with opening a one lot position here on the S&P 500. I'm going to be buying here at market. Now, let's see, where do I want to place my stop loss for this one? So ideally, when you're trading with the overall trend and when you're trading on the within the pullback in the secondary trend, I do think that there is a possibility of price moving lower. So there is a possibility of price taking out the low of this wick right here. So let's see what maybe like the best place to really place your stop loss would be below this swing point right here for a swing trade if we believe that the S&P 400 is eventually going to be much, much higher. But I'm watching this as a trade that will be open and potentially closed on Friday because I think there's going to be a bounce happening and this to be bought up before the end of the week. And I would like to close this trade before Friday. So I'm going to risk it with placing my stop at 6,700. And now you can also see the projected loss right here in dollar amounts. Where's the take profit going to be? Well, I'm looking to take profit up here at around 6,885. So we go in 6,885 right here. A good 2R risk to reward. Now you can see that my projected loss is $63. And I want to make sure that I'm not risking more than 1% of my total account. And my total account is $10,000. And obviously 1% of that is 100. So what we can do is we can place an order of, let's see, 1.75. 1.75 amount would be a projected loss of 63. Can we increase that to 2? Yeah, that should be right. So you know what, let's do 1 and then I'll add to this position if there's extra confirmation. Okay, so I'm going to go in with the market right here and confirm. We are now long on the S&P 500 and you can see our order with the stop loss and take profit right here on our running P&L. All right, so that's the overall trade that we have on the S&P 500. Now let's move back to our charts and we're going to be looking at another market that I know a lot of you want me to look at, and that is Bitcoin. So let's go back to Bitcoin right here. And then after Bitcoin, we'll take a look at gold. And then after gold, we will take a look at a few altcoins. And if there's anything in particular you want me to look at, let me know. Yes, this is a great comment. It closed that previous gap. Now, there is a myth in the market that all gaps have to be closed. That's obviously not true. If you look at the statistics of the gaps in the S&P 400, yes, a lot of times they do fill, but they do not always fail. So there's this thing, you know, you when you're new into trading, you hear people say like, oh, it has to fill the gap down here. Like for Bitcoin, for example, Bitcoin doesn't have the weekend gaps, obviously, because it's trading over the weekend. But the CME market for Bitcoin creates gaps. So a lot of people said, well, there's a CME gap and it has to be filled. it absolutely does not have to be filled. But yes, if it aligns with a breakout area, there is a higher chance of it filling than not. What's up, Evans? Welcome to the live stream. Let me know if there's anything you need help with, or anything that I can show you here to help you out. Which Fibonacci levels has more lower risk on your? So I think the 0.618 or the 61.8%, which is the same, right? Depending on what settings you have on the fib. The 0.618 or the 61% is a beautiful fib retracement level, because that's the area where you have an uptrend, right? And then you get a dip. I can show you here, right? That's, you have an uptrend, right? And then you have a dip down to the 0.618 right here. And it's a deep retracement, but it doesn't break the trend. So this area right here, especially between the 0.618 and the 0.786, usually gives quite good entries. But don't take my word for it, right? Go out in the market and test it for yourself. We have beautiful demo trading account on PrimeXBT that you can go in and try these ideas out for yourself. If you find they are useful, you apply that strategy then to your live accounts. Right. Okay. So I believe that now I do feel like Bitcoin has not been acting as strong as I wanted to act in the last couple of months. I mean, we've seen the Nasdaq and S&P 400 just absolutely exploding to the upside, and everyone's just super bullish. But Bitcoin has been kind of stalling in a sense. But what I do like is I've seen a pretty clear pattern within this trend for Bitcoin right here, where you have a downwards trending secondary trend right here, and this is on the arithmetic scale. If you switch to the log scale, it's not going to look the same. We'll have this overall environment right here where we had a couple of bearish downtrend basically, right? And the question is, are we seeing the same right now? And it's also interesting to see how did the S&P 500, because remember, the Bitcoin is a risk asset, S&P 500 is a risk asset. They are somewhat correlated. So what I'm going to do here is I'm going to go in and I'm going to add the S&P 500 right here, not down here. I'm going to add it to new price scale. So yeah, what can we make of this? Let's make the line wide here. So what I've done here is I've overlaid the S&P 500 on the price of Bitcoin, and the question is, have we seen Bitcoin being in a primary downtrend while the S&P 400 is still in an uptrend? And I would say yes. We have the S&P 400 being in a uptrend in the summer of 2024, right here, uptrend, and Bitcoin in a downtrend. Here, obviously, we have the major dip in the Trump's tariffs and all of that. Downtrend on the S&P 500 and a downtrend on Bitcoin. But now we're also seeing, an overall uptrend in the S&P 500 and downtrend in Bitcoin. So yes, it is very possible to see a downtrend in Bitcoin and an uptrend in the S&P 500, and them kind of not being correlated. And it's not really worrying me too much, because it has happened in the past, and Bitcoin has managed to recover its overall trend anyway. So I am bullish on Bitcoin, and there's a few different ways to look at this, because even on an intraday basis, there are definitely I definitely see opportunities. But we can first look at the weekly here, right? And we can mark out some levels for Bitcoin. Let's use the low of that wick, and then we'll connect it with the highs of the weekly candle closing here. So we'll basically connect it to the resistance created when we broke into all-time highs in the beginning of the year, and then we have a beautiful retest right here. So we got, resistance, we got an SR flip, a support and resistance, a resistance area flipping to a support, and now we're testing that support area for the second time. I feel like this right here is support in an uptrend. What do you do when you have price hitting support in an uptrend? Yeah, I don't have to say that. You're probably already very aware of what the possible thing to do would be. Again, I'm not trying to give you trades or anything like that. I'm trying to give you the knowledge that you need to make these decisions on your own, based on your own system and your own analysis. But this whole webinar, we wanted to design this here today, the webinar, because there's so much going on in the market right now, and we want to make sure that you are grounded, you understand what the overall fundamental macro environment is looking like. And we got to be honest, we are in a pro growth environment, but there are some potential signs of it being a bumpy ride ahead. And obviously you see that in the markets right now. But the worst thing I believe an investor can do is get into the market, and then as soon as you see a bearish headline and price goes down, you get out of the market, and then when it recovers, you get into the market again, and panic buy and panic sell. That is never going to work long term. As an investor and as a trader, you have to be calm, you have to be disciplined, and you have to make the right decisions based on fundamentals and technicals, and not from an emotional point of view. We know that we are at weekly support. What about the daily? Can we find any type of decent support here on the daily? Yes, absolutely. I do like what I'm seeing right here. What is the chance of price breaking below this daily support right here? There's always going to be a chance of that happening, but support is support until proven otherwise. And when it's proven otherwise, your stop loss should be hit. That's why we have a stop loss at the invalidation level of an idea. So what I'm going to do here is I'm going to go long on Bitcoin, and I'm going to not look at this as a swing trade. I will be using the overall macro environment for my ideas to enter the market, but to exit the market, I'm looking at more short term. And the resistance I'm looking at is this level right here. Going down into the 4 hour, gonna adjust that a little bit as well. Go into the hourly. What I like to do is also, when I have a clear move to the downside, I use the fib on the Fibonacci tool on this down move as well. And look at that. Isn't that just perfect? Look at the level where I added that 0.618. It aligns in absolute perfect harmony with that low of that resistance area. So what I'm going to do is I'm going to go into the crypto futures platform on PrimeXBT, and I'm going to open up a rather high risk, high reward setup right here on the Bitcoin. So let me quickly switch to the right screen. Right, so we're going to go into the crypto futures. Okay, so I don't have my USDT on here right now. So what I'm going to go in and transfer. So I go to, let's see where they have here, exchange, transfer. Let's go to my wallets. Oh, look at that. I've just unlocked a reward, $20 bonus. So in our reward center, and you can click this blue button right here. Now I got this reward most likely because I opened that position on the S&P 400. So if you go to your reward center, you can check all your all the rewards you can get from trading. So you'll actually you'll actually make money. There's two different types of rewards, right? You can get your the cashback rewards and your trading bonus. So your trading bonus, which is this one right here, make your first trade. I'm going to claim that one. I got $20 extra, and then deposit funds. I got $10 extra, and then I can. Oh, I need to deposit. All right, that's right. So I should already have gotten that one. Anyway, so you can go in and click redeem rewards right here, and you can select either a cashback or a trading bonus. A trading bonus is added to your account as added margin. You can't withdraw that directly, but your cashback is you can withdraw that directly. We have more videos explaining this on the YouTube channel as well. But let's go into accounts here, and I am going to transfer money into the USDT account. So from the wallet to the crypto futures, let's go with, I don't need more than 5. So we'll do that. And the transfer is now complete. I can now open up the crypto futures account right here. And we are going to open a position on the Bitcoin. I have the Bollinger Bands open. Man, I love the crypto futures platform. It is insanely good. Okay, so removing the Bollinger Bands right here. I'm just going to remove all indicators right here. We have a question on the indicator as well, and I'm going to cover that in just a bit. I'd like to actually trade mostly without indicators. Okay, so where do we have our stop loss? We want to go long at market. We do we want to, let's see, how big of a position should we have here? Let's go with a 0.05 to begin with. Yeah. Or should we do use 0.1? What is the percentage of our stop loss? So our stop loss is about 1% below price, which means if I go in with 0.1, yeah, okay, let's do that. We are now long on Bitcoin right here, and I'm going to place my stop loss right below here. I will be losing $137 dollars on this one if it hits stop loss. So it's a little bit higher than what I wanted. I just did the calculation in my head. Usually I do with a calculator, of course, but I just did a calculation in my head. It's a little bit higher than what I wanted. So I'll have to monitor this position better. It's about $40 more than what I wanted, so it's not that high. Let's go to the 4 hour here. Where is our TP? Our TP is going to be, that is the 4 hour. It's going to be right here, I believe. Yeah, so it's going to be above 2R on this trade right here. We are already $4 in profit. Nice little click the little share right here, and you'll see got nice little $30 profit, 30% profit on that one already. Okay, so that's looking good. Let's go into the, I'm just going to go into the 1 hour to make sure I have the orders in the right place. I think that's a little bit too low, too high. Let's put it right here. Okay, that's better. That's the trade right here on Bitcoin. As you can see, very tight stop loss, but I'm going to be making sure I monitor this one very, very closely. Before we go into gold, we got a great question here. More indicators or less indicators are better? Also, which indicators you're frequently using? So I am, I've used many different indicators, and the way I use, okay, so let me try to phrase this question in the right way, or the answer, because it's a really good question and it deserves a thoughtful answer. So you go into trading, you start trading, and you start looking for a specific system, Like I need this system, or I need that system, or I need to buy a system. And if you can't find a system, you look for a specific indicator that can give you signals and trade based on those signals. That's not what trading is all about. Trading is about having a more of a holistic view of technical analysis. If you're using technical analysis, you have to view price as fractal, right? So you need to understand that it doesn't really matter what time frame you're looking at. You need to have a broad understanding of all the time frames, and you need to understand the primary trend, the secondary trend, the intraday trend, and you need to understand price from the top to the very bottom. So you're doing that top-down analysis, and you're not just going to be an expert at the 5 minute. You want to understand the whole market, every time frame, what's happening in the market. And when it comes to indicator, there's a lot of different types of indicators. You have indicators that is based on moving averages. You have simple moving averages, exponential moving averages. You have Bollinger Bands that is based on a moving averages, and the higher threshold and the lower threshold of the Bollinger Bands is based on the volatility of the assets. So it's contracting when it's less volatile and then expanding when it's more volatile. And then you have momentum indicators, like, for example, you got the MACD, the RSI, the stochastics RSI, and all of that. And they are basically showing you the same type of information, but in different ways. So you need to understand, what are these indicators doing? How are they constructed, and how can you use them in your trading? And you will quickly learn that what you need to do in the market is you need to find out who you are as a trader, your personality as a trader, and then find the styles, the indicators or no indicators to fit with your personality. For me, I like looking at MACD histogram divergences and RSI divergences, and I like looking at volume, like OBV. I basically look at a lot of different indicators because it gives me some extra clues in what price is doing. But as you've seen here today, price is king, okay? Price is everything. Everything you need to know is in price. Every single indicator out there except volume is based on price. So when you're looking at an indicator, you're basically looking at different ways of viewing price, right? So it's not about which indicator is best or no indicator. It's the question is, who are you and what indicators works for you? So you need to do that journey on your own. You need to find and experiment with all the different indicators out there and then understand which one is best for you. But remember, no matter how you're going to be trading in the market, price is always going to be number one priority, because that's what we're trading. We're trading price. Indicators just helping us along the line. Okay, so that's Bitcoin. We now have a trade open on the S&P 400. We have a trade open on the Bitcoin. What's happening on the S&P 400? The S&P 400 is looking absolutely fantastic. We have a great entry on that one. Let's go to PX Trader. We're making $3 on the S&P 400, which is not a lot of money, but just wait. It's gonna grow. It's gonna grow. Okay, so we got in the crypto futures right here, we got the long on Bitcoin. Now let's switch over to the charts again, and let's take a quick look at gold, because I know a lot of you are interested in what is happening with gold right now. And look at the S&P 400 here. That's a beautiful, beautiful bounce right here. All right, so what's happening with gold? Well, gold is interesting because if you look at the primary trend for gold, it is extremely bullish. Excuse me. Gold is extremely bullish. But we've also seen that a potential end to that debasement trade. What is debasement trade? Well, it's basically after the it's a combination of debasement trade and geopolitical situation you have after the Ukraine Russia situation. You got the central banks and institutions, the government kind of started panicking when they seized Russian assets and it started piling into gold, which obviously a huge accumulation of gold back here, right? Huge accumulation of gold, and you had that breakout. And then what also fueled this move to the upside was the debasement trade, basically the devaluation of currency. And what's the best hedge against inflation and devaluation of currencies? Well, that's gold. Gold has always been a wonderful hedge against that. But then we saw a couple of weeks ago people lining up to the store gold to the stores, to the gold stores to buy physical gold. We had everyone talking about the debasement trade everywhere on Bloomberg and the major news outlets, and that caused, I believe, a Forex phase and a top in gold. But let's add some EMAs here. And we can definitely say that, gold has a history of coming down and hitting the daily 20 and daily 50 EMA area, which is this one right here in major uptrends. Can we move lower on gold? Yes, of course, we can very well move lower on gold. But this is such an incredibly strong bull market that a dip like this one that caused headlines all over the world when gold dropped 11%, more than I believe it has only happened once in the past after a 9 week, like 9 consecutive bullish weeks in a row. So it's definitely in for a pullback. But I am actually looking at gold and thinking I want to potentially be buying here, because I do think that the debasement trade is not gone. The underlying foundations for gold to be bullish is still there, and I think we are potentially going to see a move into new all-time highs. When, I don't know, but the research that we've done supports the idea of seeing gold. There's a higher probability of seeing gold higher in the next, let's say, 6 months than to see it much lower than it is right now. Do we think that the low is going to be here, or do we think it might be down here? Well, if gold drops below this range right here, I am definitely going to be looking at the 3,500 to 3,600 level for a position. But if we break above this range that we're forming right here, I think that marks the medium to long-term bottom on gold. Do we have a trade on gold right now? I don't think so, but I'll be adding an alert above this range high for potential long on gold. That's the overall view that I have on gold. I am cautiously bullish on gold. What else are we going to look at? I think for the rest of the analysis, I'm going to head over to the crypto futures platform so I don't have to switch over every time. All right, here it is. Okay, looking good for the gold long, not the Bitcoin long right here. We're going to look at, where do I have my favorites here? So I got, let's add Ethereum to the favorite list. Let's look at XRP as well. What else do we want to look at? We're going to look at Solana as well. So Bitcoin we already have open. Look at Ethereum. Let's go to the daily on Ethereum. Honestly, Ethereum looks pretty ugly. Get another question from Raul here. I see you use different time frames for different instruments. What is the optimal time frame we should use to decide on taking positions. So it depends on, again, your trading style, your personality, and the way that you want to be trading. I'm a swing trader, right? I'm the type of trader that trades the like with the primary trend and the secondary trends, and those are visible on the daily and the 4 hour. So I'm the type of trader that I am looking to buy low, sell high. I know that sounds super simple, but I'm looking for markets that have. So, for example, if you're in a bull market, I'm looking for markets that have dipped quite low in a bull market, and I'm looking for signs of accumulation down there. And that happens over the course of a couple of days, right? And maybe a couple of days. So I'm looking at the daily and the 4 hour. And for me, the 4 hour time frame is perfect. And I'm a full-time trader, so I spend all days waiting for alerts and looking at the markets, but I also do other work, right? So for me, the 4 hour is perfect because I'm then allowing myself to, if I'm only taking trades based on the 4 hour candle, I can take one decision every 4 hour candle. So for me, that fits me perfectly because I'm not the type of trader that should be on the lower time frames. That means I had to take more decisions, right? And that doesn't fit well with my personality. I know many other traders that it's the opposite of me, and they thrive on the lower time frames, and they have difficult being disciplined on and patient on the high time frame. So what it all comes down to is your approach in the market. But if you're like me, if you like to take a little bit more slowly and you like to digest the information a little bit more slowly before taking decisions, the 4 hour is the perfect middle line between the higher time frames and the lower time frames. Now, if you are someone who really thrives on the lower time frames, I'd say you can view the daily, or you can view the 4 hour as I view the daily, and then you look at maybe the 1 hour or 15 minute as the perfect mix between the higher and the lower time frame. So look at the 4 hour for the structure, and then maybe the 15 minute for execution. So it all depends on where you're looking. I mean, if I'm scalping, if I'm trading the very low time frame, sometimes I do that. I look at 1 minute and 2 minute and 5 minutes. So there is no one right time frame, is what I'm trying to say. The markets are fractal. Price action is fractal. You're going to see the same market structure on the 1 minute as you're seeing on the monthly. So it doesn't really matter what time frame you're choosing, as long as that choice goes in line with your personality. I feel like that is super, super important. Okay, looking at Ethereum here, I feel like it's a little bit ugly, okay? Because we broke below that one right here. It definitely looks more bearish than Bitcoin. It doesn't have the same overall push to the upside. But the question is really, do I want to see a long on Ethereum here, or would I potentially wait for a move closer down to, I don't know, 2.7 maybe, somewhere in that range? But we did, of course, hit that. Let's go into the 4 hour. I'm a little bit cautious on Ethereum. I feel like the risk to reward here on Ethereum is not great. Let's look at another. Look at Sol. When we have these dips in the crypto market, what I like to do is I like to look at altcoins that have strong community, strong following, an actual product, have something that is actually not just noise. So I want something that is actual real in altcoin market, and Solana is one of those. We also have XRP, strong community. You can think whatever you want about XRP, but it sure does have a strong community and a market structure that supports it. Solana, if we look at the weekly, we can clearly see that there is some sort of support happening right here. Let's go back to to the daily. The only issue here I'm having with Solana is the fact that we're hitting that resistance right here. So I do feel like all coin markets, we're looking at Ethereum and Solana, might need to recover a little bit more for me to really feel like it's a good place to get in. XRP though, XRP looks interesting because if you, we can look at, let's see, where's the rectangle? Here. It's hitting that support. So it's hitting that support right now. And I do feel like if Bitcoin and the overall market is going to recover here, XRP is definitely an interesting place right here. Yeah, I quite like it. Okay, so on the 4 hour, yeah, and I like that. It reminds me very much about on Bitcoin. So what I'm going to do here is I am going to open up a position here on XRP. I'm just going to place it below that low of that wick. And then this one, I might actually hold for higher targets. Because if this recovers, I'm thinking it might actually come up and test this resistance above here. So we're looking at slightly below 2R risk on this one, but that's what I'm looking at right here. I quite like that. So that's a long on Bitcoin, XRP, and S&P 500 today. We can also hover above here and see our open P&L on the PX Trader platform as well. So you can switch between crypto futures. You don't really have to switch between PX Trader and crypto futures without. You can see the open P&L by just dragging your cursor above right here. Okay, so that's what I'm looking at right now in the market. And this trade right here on XRP is a very simple mean reversion type of trade. Mean reversion trades, they work in both uptrends and downtrends and ranges. Excuse me, just 1 second, gotta get some water. We're also running to the closer to the end of the webinar here today, so please make sure that you do ask any questions that you might want answered. So a mean reversion trade is basically, as I showed you earlier in the presentation, we had a uptrend here. So bull market is obviously an uptrend, but price they fluctuates like this around that primary uptrend. So a mean reversion trader would short here down to the mean price, and then long here, profit here, short here. And the same thing goes for a range, right? You have range lows, range highs, and the middle of the range right here. When price is down here, you're looking to buy, sell mean price, and then if price continue higher, high goes, you sell here. All right, Matt says, please take a look at US 30 and NASDAQ. Yeah, I'll take a look at that. Let's go to PX Trader platform, and we're going to look at US 30, which is the Dow Jones. Let's open that one. Well, looking at US 30, it's I mean, I still like what I'm seeing right here. It's basically it's basically giving us the same break and retest that we're getting on the S&P 500. Although the S&P 500 is a little bit cleaner than this, but on the daily we do have that break and retest on the daily. Let's go down to the 4-hour. We're creating. Okay, so it looks like we're creating a potential triangle pattern here. Yeah, so it looks like we're creating a potential symmetrical triangle here. Let me see if I can add that. But that's the low. And it kind of looks like this, right? We have that symmetrical triangle. And the way you can measure this is there's this thing called the measured move, where you're basically taking the low, you're measuring from the low of the pattern up to the high of the pattern, and then you're extending this line to wherever that breakout is. So if the breakout happens here, we're looking at this move basically. So if we do have a breakout above, on this chart we have it at 170, around that level. I would look at a move up towards 47,500 for US 30 Dow Jones. And I do believe this is should be similar prices. That's what I'm looking at. So I'm looking at a symmetrical triangle with a potential breakout to hit that previous highs. Now let's see if we can find NASDAQ, the US 100. Got that one right here. And NASDAQ looks obviously much more similar to S&P 400. This is the resistance that we're currently testing right here. And I'm looking for, and we also have a higher low right here. So I'm looking for a break. If we can break above this level. So on this chart, that's going to be 25,450. If we get a break above that level, I'd be looking for a move up to 25,700. Yeah, I mean, if you're trading altcoins with leverage, you obviously have to be you have to understand what leverage is and the possibility of liquidations. Do not trade on leverage and margin if you don't understand what that is. And I do believe we have some videos on that in the YouTube channel, and we're going to have more educational material on this for you to understand what it is before you really get into it. Of course, holding altcoin spot is not gonna be able. You're not gonna be able to have that leverage. So, like, if you're looking for a 5% move on an altcoin, you'd actually have to go in with almost all of your whole account into that altcoin on spot market to be able to get that 5%. And that's the beauty of leverage. With leverage, you only need to really put up a tiny amount of that actual position to make the same amount of money, and therefore margin and leverage trading is more applicable to more short-term trading, where you're able to handle the risk, and you can use stop losses and things like that. So obviously, long-term investing with leverage in altcoin market might not be the best thing to do. All right, I think that sums up the webinar today. We got some good trades in, some interesting position in, and let me know, guys, in the comments. And if you want more live streams and webinars like this one, make sure that you hit that like. And we're going to try to get these live streams and webinars out on a more regular basis as soon as we do see that there's something happening in the market where we feel like we need to share our research and our views on the market with the community. So thank you, everyone, for joining here today, and I hope to see you all in the next one. Take care and have a fantastic rest of your week.